Hi everyone, my name is Piterpakulski. Today we have a very important video. We need to build some environment for scenario analysis, so we need to build some kind of core where we will be playing with main coefficients to see and look at the financials. So we need to build some area with coefficients, and we need to see the financial efficiency while playing with these coefficients. So we need to build some interactive environment to see the basic numbers of the project. So this will be won't be a very fast exercise, but it is vital, because when your financial model is built, you will spend a lot of time in this core playing with this coefficient, that coefficient, and this will tell you a lot about your business idea, how much money you need, what will be the payback period, internal rate of return, and that all of that. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials. And when I finish this model, I will give you all the links in the description of this video as well, so you may watch them for free from scratch, one by one. So first of all, let's briefly run through previous tutorials. So what we have? So blue cells are our inputs. So we have different types of trips. So we have 5 cars in our fleet. We have different types of trips. We have we can specify the mileage, duration, revenue. We can switch them on and off. We have coefficients for mileage, duration, and revenues. So we can switch on and off different days from calculations from Monday to Sunday. Then let's go back a little bit. So we can create the portraits for each day or inside the typical week. So these are the amount of trips for Monday. These are coefficients to these amounts. We can switch on and off different types of trips for calculations, from calculations for Monday, Tuesday. So this is the typical week of this car. Then we have a global coefficients for the amount of trips for a specific day inside the typical week. We can specify the limits for daily mileage, for daily duration of the car being online. So then we were talking about the table with inputs, where we are specifying how fast we are reaching the target revenues. Then we were talking about the car itself. What is the mileage on the odometer when it becomes old? What is the price of a new car? What is the price of the old car with this mileage on the odometer? What is the down payment? What is the interest rate? What is the term of lease? Then we have global coefficients for dealership maintenance, parts costs. These are the dealership maintenance. These are the parts costs during operating activity of the car. This is the investment stage for this car, primary. These are fixed costs. So we take the typical year. We can switch on and off different costs, fixed costs. We can add coefficients, local and global, for fixed costs. Then we start talking about gasoline, Uber commission, payroll for the drivers. Then we consolidate all the inflows and outflows for this car. Then we set up, we can name these cars. We can switch them on and off from calculations. We can specify when each car starts its operating activity. We can set up what type of financing we're using for this or that car. Then we can switch on and off management company. Then we are talking about management company payroll, management company fixed costs, management company investment plan. Then we are talking about the general loan for the company. We can link it to the management company, or we can set up as delink it and set up a separate moment when we get this loan. Here we can specify the amount of loan, interest rate, term of loan, grace period for principal payments and interest payments. Then we set up the tax rates. Then we are building cash flow statement. Then we are calculating the amount of financing needed. Then we calculate simple discounted payback periods. And now let's move to creating let's call it a core. First of all, let's add some lines here on the top. So let's call this table financial result. So, and what we would like to have here close. So this will be parameter, this will be value, so first thing we will need equity needed, then loan needed, then total financing needed. So we can go, so we will be pulling the data from the tables that we already have. So equity we are pulling from here, loan will be the next column, the next line, then total financing will be total of this one and this one, then simple payback period, simple payback period, discounted payback period. So simple payback period, simple period, I will be calculating this 11111s. So this is simple payback period. Then this discounted payback period will be jumping from, so discounted payback period 11111. Let's count these ones. So this is discounted payback period. So this is nominated in dollars, 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 months, months. Now we need net income, this will be nominated in dollars, then net present so net income will be, we will be pulling from simple and discounted payback period. Net income we will be pulling from here. Net present value we will be pulling from here. Then we will need also profitability index, PI. This will be a ratio. We will take equals 1 plus net present value divided by loan needed and equity needed, closing brackets. Then we can add here cash balance at the end of project. We can go now to the cash flow statement. I'll look at the last line, cash balance at the end of the period, go to the last month of the project. Then we will be adding internal rate of return, this will be percentage value. I will be pulling the internal rate of return from here. So let's assume that these financials we will be later looking at when we will be playing with scenarios. So now we need to add some coefficients very close to this table. So what I want to do, I want to be adjusting, playing with these numbers plus coefficients, and I would like to be looking at this diagram and these financial results. So I want to have everything close to the place where I will be playing with all the coefficients. How can I do this the better way? So if I put this here, for example, okay, so I will be using coefficient. This will be coefficient name. This will be value. So the first coefficient, let's go to specific car, for example the first one. So I would like to be able to play with to be able to easily play with revenues. So let's go back here, revenues. So what I will do now, I will go to, so I'm going to the car 1 2 3 4 5. So here I have the portraits, the types of trips, mileage, duration, revenue, and here we have the revenues plus all the coefficients, global and local, and I will be adding this coefficient to this formula. So now I will multiply and add this coefficient here, and I will freeze it. So for example here I can easily now play with this number, take 20% of the revenues from the first car, we can see how values are changing here. So what I will do now, I will copy this formula, this part of this formula, and go to the car number 2. Three, four, and 5. So now we have global coefficients and local coefficients. So if, For example, we want to take 80% of base pricing. We can go here, do it like this. If we want to dive deeper into the specific car, we can go here and play with coefficients locally here for these specific cars. If we would like to play coefficients for all the cars, we can do it here. So this coefficient works with revenues. Then let's add coefficient to the amount of trips. So this will be so I'm going up. So I will be adding this coefficient here. So this is the portrait of Monday, Tuesday, Wednesday and Thursday. This is the amount of trips. This is the global coefficient for this car, and I will be adding global coefficient for the whole business from here. One, two, three, four, five, six, and 7. So this is for the first car. So for example, if I would like to take 50% of trips, so now these values will be applied only to the car number 1. Now let's copy this formula, part of this formula. Now let's go to the car number 2. Let's add this coefficient here. So now we can go back to the model. All our coefficients are globally linked to the amount of trips. So for example, we can take 80% of basic amount of trips. But for example, what we need else, we need to place here some control, let's say some control indicators. For example, if we increase the amount of trips and we will go over the limits. So for example, here we have the limits for the mileage and duration, and if we increase the amount of trips, will be shown here locally that we can't make this mileage per day, or we can't be online more than, for example, 7 hours per day. So we need to put some indicators here that will signalize us that we can't make we can increase the amount of trees from 20% because we will go over the limits that we've assigned. So that's why we need what we need to do. We need to go here and create some rules. For example, so what I will do, so I will write a very simple formula. If this is more than 1, we will put 1, otherwise 0. The same here. So if we, let's say, take 100% the base value, we can see that we are over the limits only on Monday. So we can go, for example, here, increase the amount of services. For example, take 90% of base values or 50% of base values. So let's, for example, increase on 20% the amount of services to create, so let's create totals here. So amount of trips, and what I will do, I need to put some details. So for car 1, 2, 3, 4, 5, car 1, 2, 3, 4, 5, I will add a line here, insert. This will be how it is better. So here I will place the limit, mileage limit, duration limit. mileage limit, working hours limit. Okay. So this is very important, because when we will be building some scenarios increasing the amount of trips, we can, for example, increase the amount of trips here, but we won't be able to see that we are working, for example, 30 hours per day, or the car makes, for example, 800 miles per day, so the mileage is crazy. So we need to be living in the world of realistic numbers for the mileage, daily mileage, and daily working hours. So that's why we are doing this exercise. So I'm going back. So if we have some numbers that are bigger than 0, then we have some mistake. So we can increase the so let me add some. So if this one is more than 0, we will place here mistake. Otherwise, okay. So here we can see mistake. If we, for example, increase the amount of hours online and set up the limits 12 hours, we will see here okay, but we will still have mistake for daily mileage. So this will be the story. So I will add these columns for each car. Now we'll go back to the model tab, and I will pull these indicators from here. So mileage duration, mileage and working hours. So now, for example, we can use some conditional formatting for this table. What I will do, for example, let's go here, create a new rule. So first of all, let's so the basic background will be red, for example, and font will be white. And if conditional formatting, new rule, use formula. So if this value equals okay, I will change the format. So fill will be green, and font will be black. Okay. Now let's copy this format. Copy. So now we can see here green. So if we take base values, we can go here, so the first car is mistake, okay. Then here we have mistake and mistake. We can increase, for example, let's take 700 miles. So now we can see how the picture is changing here. So now we can see if we are planning to increase the amount of trips, for example, on 30%. We can see that the mileage is okay, but for working hours this will be not okay. We can go and see. So we will be working 6% more than 12 hours. So we can go back and adjust, for example, the coefficient to 125, for example. $102. So using this system of alerts, you will be shown if you are playing, if your value is realistic, if your coefficient is realistic or not. So then let's move forward. So what we can play with else? So we can play, for example, we would love to play with dealership maintenance and parts costs. Let's copy this coefficients here. So what we will do now, we will add this global coefficient to our expenses. So we will be adding this coefficient to dealership maintenance and to parts costs. So first of all, let's go here to the car number 1 and add this wonderful coefficient to dealership maintenance. Let's freeze it. One, two, three, 4, 5. Now let's extrapolate this formula. So now this coefficient is added to the dealership maintenance costs are added to the project. So we can, for example, increase this cost on 30%, for example. So we can see that they affect insignificantly. Now we can add the second coefficient to parts. Let's copy this part of formula. 1, 2, 3, 3, 4, and 5. So now let's extrapolate this formula. Car number 4, and the last one. So now we can see if we start increasing the parts cost on 30%, it affects insignificantly. Let's increase this coefficient, let's say 4 times. Yeah, it jumps, but just a little bit, because the numbers, all numbers are fictional. Yeah, we can see that the diagram is, when we will start placing the real numbers, these two types of costs will significantly affect the simple discounted payback period. So what else we need to add here? So parts, then let's say we can live with investment plan. You can add your own coefficients. So for example, fixed costs, so we will be adding fixed costs, then what else? Gasoline, commissions, driver's payroll, So first of all, let's move to fixed costs. So now let's add this coefficient to fixed costs. So fixed costs, we have the formula here. Now let's add this wonderful coefficient to that formula. Let's freeze it completely. So this will be 1, this will be 2, this will be 3, this will be 4, and this will be 5. Let's extrapolate these formulas to the bottom, to the right. So now we've added this coefficient to fixed costs. Let's just increase this cost 10 times, see how the coefficient is, whether it is working or not. So now we're adding the coefficient to gasoline. So we are just searching for the red lines which will go to the cash flow statement and add this coefficient to this line. Let's copy this part of formula. 1, 2, 3, 4, and 5. Now let's extrapolate this formula. So this will be for the first car. So this is the gasoline coefficient. Let's try how it works. Yep. Now let's go to Uber commissions. So this will be the first car. The second car. I can go here and check. Yes, Uber, Lyft. Now let's extrapolate this formula. So now let's check how this coefficient works. Now let's add coefficient to driver's payroll. So this will be 1, 2, 2, 3, 4, and finally 5. Now let's extrapolate these formulas. So now we added basic coefficients to the core. Let's delete these lines. So today we did a very huge piece of job. We created the environment for the scenario modeling. So here so here is some kind of the environment where we are able to set up when each car starts its operating activity. We can see the financial efficiency of this scenario. We can play with basic coefficients for revenues, amount of trips. We can see whether our numbers of trips are realistic or not. We can quickly increase and decrease dealership maintenance, parts cost, fixed cost, gasoline costs, Uber, Lyft commissions, coefficients. Let's add word coefficients. So what we can do, for example, now we can very quickly, for example, set up, for example, displace the cars. We can very quickly change the way we finance the project. We can, for example, see what will happen if the revenues will be 80% of our base values. what will happen if the revenues decrease, and for example the amount of trips will be 90% of what we've planned. Or for example, if we increase the amount of trips, for example, on 20%, can we increase, for example, the amount of trips on 50%? So you can see that mileage limit is okay, but the working hours, we have a mistake because we have to work more than 12 hours. So to produce this amount of trips, the car will be working on 20%, 21% more hours than it really can. So we set up the limit for 12 hours. The car will be working on 21% time more. So we can go back and see which numbers are more realistic. So we can, for example, increase and decrease different types of costs. For example, we can see what will happen with the dealership maintenance will increase, parts will, for example, increase 3 times. Just imagine some scenario. Uber commission will increase, for example. Driver's payroll will increase on 20%. So, and we can quickly play with all these coefficients, looking at how much financing we need, what is the payback period, simple, just count it, what is the internal rate of return. So this is something, so when everything is ready, when the future business owner created the model, then he starts playing with all these basic coefficients, and then when the future business owner sees the financial efficiency, then he starts diving deeper in more local coefficients for specific car, and then finally this person starts getting familiar with his business idea. And this process of scenario modeling usually takes a lot of time. Well, a huge amount of scenarios is being built during this process. Maybe 40, 50, 60 sometimes scenarios are being built during scenario modeling, and this is the way how people getting familiar with their business ideas. This is the very important period in the life of the future business owner, when the person starts playing with the inputs and see what affects significantly, what affects insignificantly on the financial efficiency. So this is a very important part in business idea modeling. So guys, sorry for this long video, but it is very important that I just decided to show you all that stuff. So you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials. And when I finish this model, I will give you all the links in the description of this video as well, so you may watch all the process from scratch absolutely free. So thank you guys for watching. See you next videos. Thank you and bye.